Good morning, everyone. Stephen Mead here with Domicile Real Estate, where we are on a mission to help California's renters become homeowners. This is our first time home buyer entry level housing market update for Southern California for October 30th, 2020. You are not mistaken. Unfortunately, I was traveling yesterday and I was not able to do this live yesterday on the 30th, so I'm here doing it on Halloween. This week's t-shirt, I figured I'd pick something that looks like it works for Halloween. I don't know the meaning. I've always thought I had kind of a cool Jägermeister type look to it. I actually bought this shirt at a really cool place. I'll give them a shout out. It's a store called Black Market, and it's located in West Los Angeles in this little neighborhood called Little Osaka. It's around SoCal and Olympic Boulevard. There's a lot of cool little like Japanese shops and things like that over there, noodle places, just kind of a really fun little place to go if you haven't ever been over there. And that's why I bought this shirt. They actually expanded their store to have a separate t-shirt only store because their t-shirts are so cool. It's on the same street, so definitely check that out. This week, kind of a lot of interesting things are happening. And before I begin, I'll just say that, real estate normally has a very cyclical feel to it. And, not to say that we can always predict what's going to happen, but we see certain mileposts year in and year out, right? Like elections usually equal people holding off and not wanting to do anything. This year has broken that rule. The fall is normally a period of kind of real slowdown. This year has broken that rule. So, things are so unexpected that, the bad news is if you were hoping for sort of a slowdown to make the market easier to get into, I don't know how much of that we're really going to see. But the good news is, whenever you have a market that is this unpredictable, it also means that anything can happen. So, it's really important to kind of keep your eyes and your ears open. Anyhow, let's launch in to our stats and our slides for this week. If we start off with our price slide, and again, just as a reminder for you, this is for Southern California. We base our statistics on Los Angeles and Orange counties combined, since those are kind of a fairly contiguous market in a lot of ways. Even though both of those counties are pretty big, especially LA County. And we do this based on what we call first quartile prices. And so our entry-level home is a 3-bed, 2-bath single family, and our entry-level condo is a 2-bed, 2-bath condo. And what we do is we sort of look at that first quarter of houses. So we say, what's the 25th most expensive in that category? That's what we're calculating here. And again, this is based on what homes closed in the last week. We see a little bit of an uptick on our condos and pretty much a flat line. Let me get out our little pointer here. Pretty much a flat line on our single family. I actually think that, these graphs really sort of underscore something that I think might be hiding a little bit of what's going on in the market. And I'm gonna go off screen share because I'm gonna take just a minute to talk about this. If you watch our regular podcast, I mentioned, or our regular market update video, I kind of mentioned this. I think we're seeing a change in what people are buying, and I think that might be skewing our median statistics. So let me give you a real concrete example. Let's suppose that, to make things easy, that there are 5 really nice houses that are 2,000 square feet, and they sold for a price of $600,000. And next week, the same house is sold for $610,000. That would make our median price go to $610,000. But what if next week all the 2,000 square foot nice houses went for $620, and then 5 more people bought crummy houses for $580? Well, guess what? Our median price would still be $600, but we would all know that prices have actually changed. And I think that's what might be happening, is because this market is so inventory constricted, there just aren't enough houses for people to buy. I think people are relaxing the requirements of what they're buying, and they might be buying lower end properties. And that might be making it look like prices are staying steady when they really are not staying steady. And that's probably one of the biggest problems of the median price statistic, is that it assumes people are buying the same houses every week, and they aren't. I think we're seeing in the market, we are seeing people buy homes that have been in the market for 60 days, the one that backs the railroad tracks that nobody wants. And they're doing this because they're getting desperate. And this is kind of affecting. So even though our median is staying the same, I don't feel like prices are actually staying the same. So just a little bit of an aside there. I'm trying to think of a way to run data to sort of verify that and kind of prove that theory to you. So maybe stay tuned. Maybe next week I'll have that. Going back to our slides here, it looks like these have remained pretty steady, but again, I actually think they're going up. Remember, this is also sold data, which means it is 30 days old. Now, if we go on here to our next thing, and let me put this in a better mode here. There we go. If we look at our payment, I still believe that payments are fundamentally the same or less than they were in 2018. I do still think it's really a great time to be in the market, because if prices haven't changed since the middle of 2018, that really means prices have come down, actually. It might not seem like it, but your payment to get into a house is easier today than it was 2 years ago. And that's still true, which is great news. And again, if we kind of go and we look at our income, when we remember, this is based on 5% down, including mortgage insurance, including property taxes, including HOA fee in the case of our condos. This is really trying to give you a real picture of what is the minimal amount of income that is required in a household to afford these mythical entry-level properties, our hypotheticals, if you had no other debts. And it's $87,000 in the single family and about $67,000 on the condo. So, now we've kind of talked a little bit about prices and affordability, but what about availability of houses? Because I think that's really sort of where the meat of what's going on in this market is. And we've kind of got some interesting news, and I'm going to talk about, again, another thing that sort of I think I've uncovered, and I'm looking for a graph that might tell this story a little bit better. So this is our absorption rate, and remember, our absorption rate of new listings is calculated a little bit differently than other people. I like to compare what came on the market with what immediately has gone into escrow, because I think that that's an important statistic to sort of understand how fast these properties are moving. A lot of people compare new listings to sales. The problem is sales are, basically contracts from 30 days ago. So you have this mismatch of timing. Whereas new listings and new escrows, those are only about a week off from each other, right? Like this week's new listings will be next week's new escrows. And if we look here, a couple of interesting things are happening. So the first is, for the past 3 weeks, we have been in, for our single family homes, we've really been in that 90% arena. This week at 92%. This is a hyper competitive market. That means multiple bids, prices going where you didn't expect, terms coming in that you didn't expect in properties, bidding wars, et cetera, et cetera. I mean, really anything above 90% is hyper competitive. But what I think is also really interesting is, let's look at the condo statistics. They have been slowly rising over the past 4 weeks. And you might be asking yourself, well, why is that, right? Well, about a week and a half ago, we actually had a little bit of what I call an interest rate scare. And, an interest rate scare is when rates have been very low and then they spike up. You have people panic, and they almost panic buy because they think that their opportunity is going to be lost. Now, rates actually came back down again a little bit, and they're still at their very low rates, kind of hitting on those bottom numbers. A lot of that, I think, hinged upon whether there was going to be a stimulus package or not. The Senate did adjourn until after the election with no stimulus package, which means, the market reacted by lowering rates. That's sort of the bond market rallied and the stock market took a hit. So if you look at this graph, right, though, you say this is the tightest market we have ever seen. When you look at how quick these houses are getting gobbled up, right? But if we go to our next chart, we see something really, really interesting. This is our week supply of houses, and we actually do a 2-week look back on how many houses went into escrow, and we calculate sort of this, how many weeks of supply of houses do we have? For condos, our number actually went up, and it's been going up. So how do you explain that the absorption rate is rising, but so is availability? That's like that. Those are almost contradictory results. And if you look down here for our single family home results, what you see is that they've been declining, but not really declining as much as you would think for being over 90%. And, I have a little bit of a theory, and I'm kind of looking for the data to sort of prove this out. I think that what might be happening is we are seeing a very high rate of fallout on listings. And what's a fallout rate? A fallout rate means it goes up on the market, it gets multiple bids, it gets bid up, they agree to terms or whatever, and then the home comes back onto the market and it falls out. The buyers walk away. And we're just seeing that anecdotally. I'm seeing that in record numbers, right? And the number of listings where they say buyer couldn't perform, or That's the sort of generic excuse. The usual excuse was the people got into the house, they bid up to get it, they had second thoughts, or they did a home inspection and discovered this house is a piece of junk and I'm overpaying. So we're definitely seeing some hints that there's some buyer pushback, and I'm looking for a stat to kind of bear that out, and that might explain why houses are getting bid and jump into escrow, and yet our overall supply of houses is actually either holding steady or increasing. Now, admittedly, it did lower a bit in the last 3 weeks if we're looking at our single family, but our condo market, that absorption is going up, and so is our supply of houses. So, it's pretty crazy out there, and I think this is just kind of a little bit of a plug. This is really the reason why you need someone who is, if you're thinking of buying a home, you really want to work with an agent, whether it's us or somebody else who really has a lot of experience in understanding these market nuances and sort of how to strategize in these kind of particularly challenging markets for first-time home buyers. Anyhow, comments, questions, we love them as always. Keep them coming. Do not forget to like, subscribe, and hit that notification bell if you're watching this on YouTube. Happy Halloween, everybody. And we will see you next week. Oh, do not forget to watch our whole market update video. Those do come out on Monday or on Tuesday afternoons. We will see you next week.